So now that we're in a new year, January 2024, and we're hearing a lot of the talking heads telling us that the inflation woes are behind us and we might see some movement in the interest rates. And anybody who's gone to the grocery store or the gas pump is kind of wondering, I don't know if that's actually the case. And, what does that all mean for the housing market? Well, I'm going to break it down for you. I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing update for Sarasota in the month of January. Actually, a little bit of a forecast, because I think, quite honestly, here, 2024 is going to be the year of the fives, right? I think we're going to have 5% interest rates here by the middle of the year. I think our total sales is going to be over 5 million units this year. That includes new construction. And I think home price appreciation for the year is going to be somewhere around 5%, which would be great. So looking at that, basically, D. Maker said, hey, it appears, mortgage rates are now falling again. He definitely thinks we're going to be below 6% here this year. I do agree with that. Lauren Shin said there's probably going to be a marked turn can be expected as mortgage rates have plunged in recent weeks. So just realize, just from a psychological standpoint, if buyers can see an interest rate in the fives, I think basically we're going to be back to the races, right? That's going to be pouring gas back onto the real estate market. I think people realize that 3 and 4% interest rate isn't coming back anytime soon. And if you can get an actual 5% rate, especially, historically, still very cheap money. So we'll see what happens with that. Keep in mind, though, when we're looking at current loans right now, probably about, 20% of them are below 3%. Almost 37% of them are below 4%, right? So that looks like something like this, right? These people that are below 3% are not selling. 3 to 4% probably not selling, but the rest of these, if we can get mortgage rates in the 5%, all of these people come into play, and even these people start to come into play as well too. So that can definitely lead to more inventory, which would be great, right? And basically, what we're talking about is the lock-in effect. Keep in mind, if the rate's at 6.8% right now, and you lock in, basically you get a little bit of a lower rate. So with this lock-in effect, we'll see what's actually going to happen here if we can get rates down. Okay. The other thing too was, this is from Bright MLS. They're a very large MLS in the Mid-Atlantic. They basically did a survey asking buyers, what basically were the top 3 reasons what paused their decision last year. 72% said mortgage rates, 34% said inventory. If we can get rates down, that will definitely increase inventory. It can remove these 2 largest hurdles from the buyers coming back into the market. Okay. Goldman Sachs is predicting 3 consecutive 25 basis point cuts in March, May, and June. We'll see if that actually happens. I think it may be more like 2 cuts. I don't know if they're going to be 25 basis points as we go. We'll just have to see if we can get, kind of where it's at, just because I still think that we've got a little bit of persistent inflation with just the sheer monetary supply we have out there. The jobs numbers, we're waiting on a new JOLT number that should come out today. So we'll see what that says. But keep in mind, over the past 50 years, 30-year mortgage rate has moved in unison with the 10-year treasury yield. The spread's been basically about 1.72%. Right now, we're at 2.78%. If we can get this number, it's probably not going to get back to 1.72%. If we can get this somewhere around 2.1, that could definitely put the rates somewhere in the fives. So 5 million total sales. Again, I think if inventory comes back with the rates dropping, that'll definitely help. But the other thing is new construction, right? I thought this was incredibly interesting. A National Association of Home Builders came out and basically let us know that, when we talked about sales for like this past November, 31% of total home sales was new construction. Keep in mind, that's almost triple the historical average for new homes. So I think we're going to see a lot more new construction moving this year. The other thing too is that, keep in mind, a lot of these builders are very motivated and they're offering a lot of rate buy downs, right? So they may basically buy a new client's rate down to somewhere in the 4s. We're not quite sure where that's going to be. So if you're trying to basically downsize and buy a smaller home, you could be looking at really getting into a fantastic rate, which obviously is going to lead to you putting your home on the market, which again is kind of the circular thing. So hopefully we'll see that going on. As far as appreciation being 5%, when we look at this, the black bars are the 49-year average. And the green bars are 2023. So we're kind of getting back to a normal rate of appreciation, normal being, over the last 50 years, which is actually a good thing, right? We're having a return to median price. So just realize that a lot of people think that means if we had these huge, years in 2023, that means prices have to go lower to get back to the median. We don't, but they just need to get back to kind of what was the average appreciation, which is what we're actually seeing happen. Okay. Here's some home price forecasts from everybody. When you add up the average, you're at 1.5% here this year. I think it's going to be better than that. I like looking at the home price expectation survey. That's Fannie Mae's survey done with Pulsenomics, where they basically poll 100 housing experts over what's going on in the next 5 years. And it looks like this right now. Okay. So we're looking at somewhere, I think this number might be a little bit low, but obviously getting back to that 3 to 4% appreciation over the next 4 years. Case showing FHA numbers look like this. This is basically seasonally adjusted. Okay. Another thing to keep in mind, though, the CoreLogic S&P Case and Shiller Index has increased by about 7% since the beginning of the year. That's 1% higher than the peak in 2022. So remember, we had that correction second half of 2022 when the mortgage party finally ended. Realize we have regained all of that loss back on a national level. I understand if you're in Boise or somewhere else where you're having like 30% appreciation year over year, maybe you haven't gained it all back yet, but still in pretty good shape. When we look at the percentage of annual home price appreciation over the 42-year average, we're pretty much right where we need to be. Okay, so hopping into Sarasota housing markets, remember, these are December numbers. This is for single family residences only. It's all over Sarasota. These are median numbers. Okay. And we're basically looking at a lot of green here, which was surprising, right? Home prices were up 6% year over year. Active market time took a little bit longer. Our original percentage of list price was down a little bit, but inventory was up to 4.4 months. That's getting to be a pretty good number. Okay. Remember that all of this are our lagging indicators telling us where the market's been. The numbers below the line are our leading indicators, and this is what's actually looking good. Remember, over the past few months, we saw a lot of red down here, but we have active listings are up 64%. New listings are up 12%. That's awesome. Pending listings are down, taking a little bit longer to sell. We see that here with this active market time, but still our sold listings are up. Our volumes headed back in the right direction. That is fantastic news. Okay. Things look even better when we look at the townhome and condo market. Sales price up 20% year over year. Active market time, things are still taking longer to sell there, right? But again, we've had a little bit of the original list price integrity holding good, months worth of inventory. Look, this is the first time in years that this number has actually gone black, right? Out of the 4 months of inventory. So this is fantastic. Again, when we're looking at our leading indicators, everything's really looking good. A lot of new active listings, 42% increase in new listings year over year. That is fantastic. Okay, pending listings still down a little bit, but not down by much, and new home sales are definitely responding. Okay, so if you have questions about, hey, what do these numbers mean? Is this a good time to sell or to buy or whatever it is? Just reach out. I'm more than happy to have that conversation with you. And that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.